Right, welcome back. So the other time we were discussing about how the markets behave, how to know the trends of the market and all that. And we were able to establish how to know the direction of the market and how to know when it is buying, and that is bullish, and how to know when it is selling, which is when it is bearish. All right. So that is a bullish trend is the one that is going up, and the bearish trend is the one that is going lower. But then there is something else we need to talk about, which is very important. And of course, a trend that is going up, you wouldn't expect it to keep going up, 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 up forever. And nothing stays up forever, nothing stays down forever. The more it goes up, the more it is likely to go down. And the more it goes down, the more it is likely to go down. But another thought says the more it is higher, the more it is likely higher. The more it is lower, the more it likely is likely lower, rather. The truth is this: you need to know exactly what the behaviors are and what those behaviors are saying to you. So that is why we're going to talk about reversals. How will you know that what was initially going down is about to go up? Because whatever the market does, it gives you a signal. All right. In fact, the chart itself is a communication system. That's what it is. It is telling you what the market is doing. The market is not the chart, but the chart is informing you about the market, telling you what is ongoing in the real market. So initially we established that on a bullish trend, you're going to have a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. That means the participants in the market in their train, they buy and wait for a low, and they buy again and wait for a low, and they buy again and wait for a low. They keep buying. They buy, they take their money, they wait for another low. They buy, they take their money, they wait for another low. That is a behavior. It is a behavior. It is a character. It is a trend. Now, it is the behavior of the people in the market. Then it is the character of a bullish market. The character of a bullish market, when you say characteristics of something, those are the things that make up a thing. When you say someone's characteristics, a car's character, a human being's character, rather, they say a person's character is a makeup of that person. So what makes up a bullish trend is that you're going to see a low, a higher low, higher low, higher low. You keep seeing higher highs, higher lows. That's the character of a bullish trend. All right. And then that bullish trend is informing you about the behavior of people in the live market. So the chart itself is a communication system that is telling you what the people in the market are doing. That is why if you see this, you can know the character of the people. That's why it is not gambling. You see things to know what they are telling you. When a person says, I am hungry, the person needs food. And when the market is telling you higher lows, higher highs, higher lows, it is telling you that the train is going forward. So you are supposed to join in that direction. Remember the first illustration we gave on the first video. When the market is moving, you join where it is going. It's deadly to see a car that is on a high speed. It's going in a particular direction. You want to go and turn that vehicle with that speed. It will crush you. And that's what happens to many people. All right. So you go on a highway now, you see a vehicle that is speeding, zipping round and all the rest of them, all that. And you want to go in front of that vehicle to be the one to turn it when there is a driver in there and that the car is respected. So the chart now is like a car. There is someone driving it. But what you can do is you can wait for the car to slow down and you join it in the direction that it is going. So that's what these people are doing. The market buys, they wait for it to come low. They join it in the direction it is going. They wait for it to come low. They join it again. So the greater the speed, the more the speed. But that it is going higher, those people who are buying are also preparing to sell. All right. So have that in mind. So in a bearish market, you're going to have a high, a low, a lower high, a lower low, a lower high, a lower low, a lower high, and a lower low. This is the character of a bearish market. All right, that is the character of a bearish market. In that case, What do you expect? You expect that when it sells, you wait for it to go higher, you then join it. That means the highs are protected, meanwhile the lows, you keep going down below the lows, you keep dipping down, down, down. But something happens in the market and it could be a signal, because whatever the market does, it gives you a signal. So in case the market that was initially doing this, doing this, doing this, doing this, mistakenly does this, what do you call that? You call it a change in behavior. You call it a change in character. So that's where the idea of change of character comes in. This is a change of character. Why? Because he was making higher highs. So you expect it to keep making higher highs. But then instead of making another higher high, he made a low that is lower than the previous low. In that case now, it is a change of character. It is a signal, a warning sign that something has or something may have started happening to that market. So what do you expect now? You don't join it, you wait. All right. If the vehicle is still trying to turn, let's see if it will turn successfully, because it might do this and still go on and continue higher. That's a failed attempt. All right. But it could do this, come here, fails to break below that high, comes lower than this low, then you can say, all right, the character has actually changed. What do? You then wait for price to approach this area or even that high, but will never take that high for you to join. So here is where you get interested in the market, waiting for it to come here so that you take the trade. Your target will be here. So this is how to take bearish trades on a reversal. Where will your stop loss be? Here. Where will your take profit be? Here. You can see that it's 2 to 1.6. That's the reward risk to reward ratio, which is just okay. So on a bullish example, this is what you will have. The market will initially be doing this: lower high, lower low, lower high, lower low. Then it breaks above the high. It is a signal, but it is not yet confirmed, because the market might still do this and continue going this way. All right. So what you do is you wait for it to come, take out this high, and then come here for you to join. This is where you are going to this is where you're going to get interested in the market, taking your buys around this area, placing your stop loss below here, and then taking your profit at this high, whatever it gives you. This is the basic structure. This is how reversals happen, and this is how trends behave. So let's go over to the chart. And for the first time, I'm going to show you a chart, because the idea of trading is not even about looking at charts. It's about knowing what you want to do and making money out of a skill you have. So it's not about looking at charts, because everyone, just like we said on the first video, if you go on the chart on the forex market, when you hear forex market, what happens to you is that you start thinking of money, charts, money, charts, money. But then you need to have the proper mindset. This is not just about going to the charts, all right? It has a lot more to do with what you know, what you can do. So let's go to the chart for the first time. Okay, so this is a gold chart, gold USD chart. Let's see what the market is doing. You can see from here that it is just obvious that we're in a bearish movement. How do I know? I looked at these highs. I tried to notice how the highs were going. I saw that this high, okay, this is another high that is lower than this high. Okay, probably this is a high, this is a low, this is a lower high, and where we are is a lower low. What do we now expect the market to do? We expect it to make another high, and then we expect it to target the lows. So in this case now, we expect that price will make a move toward this direction, and we're going to take a trade from this area, placing our stop loss where it is reasonable and taking our profits maybe from wherever it stopped. So it's just like a basic illustration of what we've been saying. All right. So we're going to still wait. We don't know yet, but this is just what, based on what we have learned, we are expecting of the market. So you can see that, you can see it's just bearish. Okay. So, but let's see how that change of character happened. Of course, in time, we're going to break down charts. So we're going into chart analysis, but this is just to give you an overview. When you want to build a house, the architect does what? He gives you the elevations of that house. He gives you the structural plan and the elevations, but you have not seen the process of building. So in the process of building is where he begins to show you this is how the cabinets will be, this is how the sections will be, this is how this will be. So when we go deep in the charts, we'll then know how to analyze. But now we are seeing overviews, all right? So let's look at this. You can see that this is a low, this is a high, this is a low, higher low rather. This is a high, this is a low, and this is another high, but price did something and broke below this low. At this point is where you mark the change of character. All right, this is where you mark the change of character. And what do you expect? For another high to form that will not go below above this high. So in that case, we got that high here, we got it here, it went, and we got that high here. All right, and then it continued, but we're not yet interested because we still expect price to come higher for us to take a trade and go lower. So it's just like this, it goes this way. You can see that by the time this is done, you will discover that the market already reversed and is not planning to go higher again, at least for now, until much later whenever it decides to. So when we go deep into chart analysis and market structures and all the rest of them, we will know. But know the basic thing. The basic thing is you are looking for a direction. When you find that direction, what you do next is know how to place your risk properly. All right. So what we call a change of character is when the market changes from a previous behavior and goes into another behavior or does something that is not proper, it shouldn't have done. When it does something that it shouldn't have done, that's when you know, oh, it's a signal that something is happening. That means you need a weapon. What is that weapon? That weapon is a seeing eye. You must see. All right. And how do you see? Only when you are patient. That's when you can see. You will never see until you are patient. So if you're not patient, what happens is that you're going to be making emotional decisions, emotional decisions, emotional decisions. And the emotional decisions will not fetch you profits. Okay, let me just show you one of the trades that I have running on the charts on GBP AD. All right. This is a trade that I have. Let me clean out these things. Okay, this is a trade that I have running on the chart. You can see where I placed the entry. You can see how the market is behaving. Is from this low to this high, this higher low. This is another high. Then what do I expect? A higher low here. Since it is here, what do I expect? A high that will get to this point. So this is just simple. All right. So when it got to this area, I was able to mark out some of my things, do some of my analysis, and took the trade. When I took the trade, I am now expecting it to end here. Then I'll take the profit and go. But although it might still go higher, but in trading, you will never command consistent results until you have consistent expectations. You should know what you want. This is a target, right? You should know what you want, know what you're expecting the market to do, and observe until it does that thing. So you can see that I analyzed it, saw it, and I acted accordingly. So if you were following these charts, if you were following the trades, and then you would have known the trend where it's going. All right. So it's not about analysis. It's about properly defining what you're doing. A lot of people make mistakes and they run their psychology into trouble. They run themselves into disorder. Once you are disorderly, you will not command profits from the markets. All right, so this is what we are expecting. At this point now, if I decide to push my stop loss, you can see that it's already in my direction. I could push my stop loss to this point and still expect it to continue going higher. It's just it. Then if you check properly here, let's just see based on what we are discussing. Now you can see that this is also a trend. He was doing this low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. And now it has done something unusual. At this point, you can mark a change of character. But why did I take this trade? Before this, I took it because I was looking at a higher time frame. So what is supposed to happen now is that price is supposed to make a move down and continue higher until this point. So that's where the relationship between time frames will come in. And then on the next video, I'm going to show you time frames. All right. So stay around. Make sure you see this to the end. That's where you probably understand what time frames stand for and how to combine them, because if you were looking at the larger time frame you might not get this trade. So something actually happened on another time frame that confirmed an action, and I was able to take advantage of it to make a profit. So let's hide this now. So if you hide this now, what do you have? It's the same thing I was telling you before, right? Can you see? It's the same thing I was telling you before. The market was making this trend down, and then it changed character here. So what do you expect for it to do this and continue higher? It is just simple. And this is the target. So we're going to learn about time frames on the next video. Make sure you stay updated because we are taking you from the scratch to where you will be an independent trader. So it's not about coming to the markets or destroying your life in the name of trading. Many people have scattered it, they have spoiled it. And when they spoiled it, trading started having another reputation for what it should be. Actually, trading is the best business. You can combine with any other thing you're doing and become who you want to become. All right, see you on the next video. Ensure you like, share, subscribe, tell your friends about this, go through the videos and follow on as we go. See you there.